Hello, everyone, and welcome to this month's Investor Academy session. I'm Sarah Turner, and I'm joined this evening by Simon Hopkins, who's my co-founder at Angel Academy. Michelle McQueen, who many of you know is our network manager, is actually off celebrating her birthday this evening, so she's AWOL. And of course, we're joined by two brilliant speakers this evening, Jo Slota-Newson from Deep Tech VC IQ Capital, and Lucy Rhodes, an experienced angel investor with Angel Academy with a growing MedTech portfolio. As usual, to talk to us and ask questions, please use chat. Just before we kick off, a little bit about us. So Angel Academy exists to close the gender gap in startup investment, both the lack of investment going to female founders and the low number of women angel investing. We've been doing this since 2014. We've backed 43 businesses in that time, many through multiple rounds. So we have more experience than anyone else in the UK in female investment. Back in 2014, people said to me that women were building niche and unscalable businesses and that female investors were risk averse and did due diligence to death. You don't hear that anymore, not said out loud anyway. So we are proud to have proved them wrong. The businesses we've backed have raised over £100 million between them, not from us alone, but including us, other angels and venture capital firms. They employ many of hundreds of people in high quality jobs. They're generating millions in revenues, and many have a social purpose at the heart of their mission, whether that's around diversity, better healthcare, or lower environmental impact. So what's our offer for investors in our networks? So Simon and I are both angel investors ourselves. We wanted to create a network that worked for us, but also worked better for women in general. I just wasn't meeting other women in angel networks that I went to, and men as well, men who care about diversity. We wanted a network where new investors would be supported rather than left to figure everything out for themselves, but where experienced investors could benefit from other perspectives and talking collegiately through due diligence, where we could do really thorough due diligence but save time for all of us by sharing the work, a network that was transparent, respectful and considered. And I'm delighted to say that our track record and point of differentiation has created some really high quality deal flow for us. And likewise, our offer to entrepreneurs. We're now an experienced and extremely high caliber network. Our communications with entrepreneurs are fair and transparent. We don't want there to be any unpleasant surprises for them. Our thorough screening process means that most of them that get through to pitch to our network will get investments. So all but one company that pitched to us last year got investment. We're also extremely structured. So it means for entrepreneurs, there's a single point of contact for them. They know where they are, what's happening, and the next step in their fundraising journey with us. We want to make raising finance from individuals as streamlined as possible. Just a little bit about what we look for in investment opportunities. I think everyone will tell you that when you're investing in this stage, it's all about the team. Do they have relevant sector expertise and also ideally some startup experience? The business needs to be addressing a large market, but not only large, an accessible market, one that's willing to pay. All but one of our investments are in tech or science. They're all doing really interesting things, building scalable solutions to really interesting challenges. We look for science and tech because those businesses tend to be more capital efficient, and the technology creates a barrier to entry for competitors. Scalability, of course, and as angel investors, we'll only make money if the companies have exit potential at a decent multiple on our initial investment amount and within a reasonable time frame as well. So just want to give a quick shout to our sponsors. We have some amazing organisations supporting us. They advise us as well as the founders we back. If your company would like to get more involved, please let me know. But now back to tonight's fun. So hello, Joe. Hello, Lucy. I'd like to invite you both to the stage. Please introduce yourselves and then start your conversation. After 30-35 minutes or so, we'll invite some questions from the audience. Please put them in chat as we go along, and we'll make sure that Joe and Lucy see them. Okay, over to you guys. Thank you.
Great, thanks, Sarah. Thanks for the introduction. I'll kick off. I'll introduce myself as an Angel Academy member. My name's Lucy. I've been a member of Angel Academy for about 4 years after meeting Sarah at a UK BAA event to increase the number of women involved in angel investing. So Angel Academy was sort of my natural home. I had done a few EIS qualifying investments before then, but nothing as it's done at Angel Academy. So it was through an EIS vehicle. How I came to angel investing was quite roundabout, really. I've got a varied background, which started with a biochemistry degree, going into being a derivatives trader in the city, trading short-term interest rate derivatives in Euribor and sterling, which then went naturally to an arts degree in an MA in textiles. So it's fairly varied. So I think it's my biochemistry degree, my sort of latent want to go back to science, that's made me interested in MedTech. They're the businesses that I'm always drawn to. I've now got 11 active investments in my portfolio, and of those 6 would come under the MedTech umbrella. And I guess if you listen to the talk where the FinTech talk where Alex spoke to Victoire, he summed my experience up fairly exactly. He said he started fairly scattergun approach with his approach to investing, and then he's since narrowed his focus to FinTech. And that's exactly with me. I've narrowed my focus to MedTech. So that's enough about me. I'll hand you over to Joe.
Brilliant, thanks, Lucy. I thought I had quite a varied background, but not not quite in the realms that you just described. So yeah, I'm Joe. I'm an investor at IQ Capital. So we're a deep tech fund based in Cambridge, investing across the UK and beyond. I started out as a scientist as well. I did my PhD here in Cambridge in chemistry, and then went over to lecture and do some research over in Canada at UBC in Vancouver. I was always working on very applied technology and sort of wanted to work on getting out of the lab, so moved over to work in a few early stage companies in renewable energy, and then worked alongside a number of companies in the life science sector as well, before moving over to investing in early stage companies. Yeah, I do a bit of dressmaking in my spare time, but certainly can't boast any textiles degrees.
Thanks, Joe. Okay, I guess a good way to start this conversation would be talking about the IQ Capital investment thesis. So, you know, I know you're not just a MedTech fund like Sarah said, so if you could just give us a bit of an overview of the thesis of IQ Capital, that would be great.
Absolutely. So we describe ourselves as a deep tech fund, which to me is we're looking for genuine innovation, sort of really game-changing innovation, but across scientific and engineering disciplines. So certainly medical life sciences, but also we look at engineering, electronics, and a lot of software. So we're pretty broad in what we look at. We invest, most of what we invest is in the UK, kind of across the UK. We were so headquartered in Cambridge. A lot of what we did to start with was Cambridge based, but now we're managing to find investments from Edinburgh to Belfast and so forth. So we're investing at the early stage as well. So often a lot of overlap with angel investing as well, which is great. So we make initial investments between about 500k up to 8 million, which really kind of gives quite a broad range of stages. So initial sort of university spin-outs or early stage startups to much more established companies across a number of those sectors. So we're looking, I mean, you know, a number of things that Sarah highlighted to begin with, you know, the team, the technology, the scalability, all of that good stuff is kind of key things that we look at, but really looking for game-changing technologies. So we're not sort of interested in another app or digitally enabled technologies, but really something kind of new and genuinely innovative.
Okay, great, thanks. And in terms of, you say you start at the early stage of investment, when you have invested in a company, will you naturally then follow on with your investments?
So not necessarily every time. We're not necessarily needed to follow on every time, but we certainly look to have a long-term relationship with the companies we invest in. So we're always a minority stake, but we tend to take a board seat, try and be as helpful for the journey as much as we can, which includes sort of reinvestment. So we can do kind of, you know, so up to 8 million in the first check, kind of a similar amount we could do again from the main fund. And what's also nice is we have a separate growth opportunities fund, which can do another sort of further up to 30 million of capital for each investee company that sort of really moved into high growth and needs that. So that's fantastic that we can really be supporting the companies through such a long part of their journey.
Yes, that's really seeing them through Series A, B and beyond, isn't it?
Yeah, absolutely, which is really nice. Yeah.
Excellent. And in terms of, so let's talk about the due diligence process. So right at the beginning of the journey with a company who's going to invest, who you're looking to invest in, what does your due diligence look like? The sort of red flags, the sort of must-haves? I mean, I think I'm sort of thinking maybe around, you know, grant funding, what their IP that they've already got, things like that. Yeah.
So especially at the early stages, we'll do all of the DD in-house. So a number of us are sort of quite technical in the team, and we go quite deep into the technology, which I think maybe more so than other funds would. So that's kind of, there's got to be you know, a lot of boxes that the company has to sort of take to begin with. You know, show that there's sort of a huge global market, show that there's a really strong value proposition, willingness to pay, all sorts of things. But then I guess we would sort of first of all dig in much more into the technology than other funds would. And a lot of that is sort of getting an idea of what the genuine innovation is, and the IP, which will often be patent protected, not absolutely always. Sometimes it's trade secret. Sometimes, I suppose, often if it's software in medical or other technologies, you can still patent around that, but sometimes trade secrets is valid as well. So yeah, kind of the team, the technology, and the commercial path is sort of the areas that we would focus on, really.
Yeah. I mean, I think that's fairly similar in Angel Academy. We do some quite deep due diligence, and one of the benefits of being a member of the syndicate is obviously I don't know, you know, I come from a trading background, so in the syndicate there's virtually always somebody with the experience that you need for the area of due diligence. We've got an IP expert in our syndicate, which is absolutely fantastic at this stage.
Yeah, it's great to be able to sort of huddle around a deal in that way. So within our team, we've got a number of people with different expertise that we you know, we'll work out who's the most appropriate person to look at different elements of the business, and then our wider network as well. So we do, you know, co-invest a lot with angels and with other sort of experienced industry professionals that can sort of get around something and add insight, and then, you know, look to co-invest as well.
So you will potentially outsource some DD if you haven't got the expertise in-house, then you can go to your network. Oh, has Joe frozen?
Sorry, I might have cut out there annoyingly for a moment. Yes, apologies. Yeah, so we don't often do formal DD, but if we're sort of previous partners, other founders that we work with, our broader network and co-investors. We sort of huddle together to work on deals together.
Yeah, fantastic. And so once you have invested, what can a founder expect from then having a VC on board, from having IQ Capital on board?
Yeah, so depending on how experienced they are with investing in startups and that sort of thing, it might feel like a bit of a step change, or it might not. But we expect a sort of certain level of governance and communication and that sort of thing. But we're always minority investors, so we're not looking to take over and push our weight around. We tend to take board seats, but yeah, have a very collaborative approach. We're there to sort of ask questions to make sure they're thinking about everything they should be thinking about, and to build connections, make introductions. But it varies. So sometimes at the earliest stages, maybe with less experienced founders, we might really spend quite a lot of time mentoring them, sharing stories from other companies, helping them to sort of think through the different elements they need to sort of build a business around their initial work. And then, in the later stages, we're really happy to sit back when the team's sort of fully in place and they know what they're doing, and they're going for it. So it really varies a lot what that sort of interaction looks like.
Yeah, there's no one size fits all, but I guess in the deep tech and the science companies, you would see more would be started by from scientists from a uni spin out. So from what you've just said, you would help them with their commercialization, because they might not have the kind of business experience and the startup experience. So would you come in and help them with the commercialization, or would you sort of would there be opportunities for you to suggest that they change the management team?
Yeah, so that's, I guess, a common journey. A lot of our founders, not all, but a lot of them are sort of academic, highly technical founders that need to go on that sort of bit of a journey into becoming CEOs often, or otherwise sort of moving into the commercial world and running a business. A lot of them start out wanting to move into that CEO role. Not all of them maintain that that's going to be the right thing for them, but absolutely we try and sort of see use lessons learned in the past to sort of get around them, help them understand the sort of different ways of thinking, the sort of sometimes at the speed of getting certain things done, but really just often it's kind of a case of just really getting out there and talking to genuine customers and finding out what customers really need and really want, rather than sort of sitting in the lab tinkering away, producing what they think customers are going to want and spending ages on the technology before getting that feedback loop going.
Yeah, that's an interesting thing. You've got to start the sales process, haven't you?
Yeah, making sure that they're not sort of perfecting some technology that they think is going to be all singing or dancing, only to come out to realize it's not quite going to fit into their customers' processes or whatever, or they need to kind of be quite iterative often in the development of the technology, and just getting as much feedback as possible from customers and real users is super valuable.
Okay, so let's just move it back slightly to the fund and to the IQ Capital. How many companies will you have roughly do you have in each of your funds?
I guess the funds are sort of have been increasing in size, so they sort of have more and more. I think we've got sort of 50 portfolio companies, or maybe something like that all together. We've recently raised our fourth fund, which we're still having a bit of investment into. We're doing roughly sort of 12 new companies every year. That's that sort of figure. So quite a lot. We're growing the investment team a little bit as well.
Oh, fantastic. And in terms of the life cycle of that fund, you'll obviously allocate a certain percentage of your funds to the initial investment. So is there a hard and set rule for that you have to allocate a certain amount of funds, the initial investment for then the follow on, or?
Yeah, we've got sort of guidelines that we set, but it has to, has to be flexible to when reality hits and depending on the actual company. So yeah, we look to invest in a number at seed stage, and then sort of expecting to take a certain number of those on to sort of Series A and beyond. We often invest in several rounds per company, but it's tricky. You can't sort of be super prescriptive ahead of time, but the length of the fund is sort of a standard 10 years, plus potential extensions. So we need to kind of get most of the investments made in the first sort of 3 years or so, and then work with them over the remainder of the fund, following on, growing them, and then moving to exits.
Yeah, so talking about exits, the thing on everybody's mind, what is your exit expectations from the company when you're doing your due diligence?
So we have a fund that's sort of in the order of 200 million. And so we need to be looking at companies in terms of companies that can sort of return the fund, which is pretty ambitious, looking for sort of big hitting returns, sort of several multiples, looking for seeing if we can see a route to getting a 10x, because inevitably not every company is going to go quite to plan, as I'm sure every angel investor understands.
Yeah. And they never go quite to plan in different ways than you expected, don't they?
Absolutely, yeah.
Yeah, I guess that's one of the big differences with the VCs and the angel investors, that we can accept those lower multiples, and we've got the kind of freedom to do an investment in, I guess they call them passion projects, where you just love the business, you love what it stands for, you think it's going to, might be a 2 to 3 times exit, but that was just something that is not on the table for a VC, is it?
Absolutely, yeah. We've got the responsibilities of investing other people's cash and not our own, so we have to work out in advance sort of roughly what we're trying to achieve with it all, and then go out and do that. We can't be swayed by cool technologies, however great we think they are, if they're not going to meet those expectations. But again, that's why being part of an ecosystem and a community is fantastic. We often exchange deals with angel groups and other investors if there's something that's maybe a little bit too low on the returns potential, but a really good business nonetheless. We might pass that on to angel groups that we work with, and vice versa. If there's something that's maybe moved a little bit beyond what angel checks can do, then we get past those, as well as plenty of opportunities for co-investing, but always good for the ecosystem to be sort of sharing deal flow across.
Yeah, fantastic. So when you are investing alongside angels, because you invest obviously at the seed stage, the angels will not be investing with you when you're writing your 30 million checks, I'm assuming. But actually, maybe some will.
Yeah, it never ceases to amaze me what some people are able to do. That's
I would not be. How is it working with angels? Where do they fit in the ecosystem of that?
Yeah, so we, I guess, rarely maybe invest in a company that hasn't had any support from angels. So I think, the sort of schemes like EIS are really important for the ecosystem to sort of give it that extra bit of incentivization for angels to get in there at the earliest stages, risky projects, and help sort of just grow that really early stage, because we need to see a certain amount of certainly technical demonstration. We need that proof of concept to be in place, and we need to have some level of commercial traction, which is not necessarily revenue at all, but some kind of gauge that there are real customers that have shown a real indication that they're interested in. And it's a little bit chicken and egg for some companies. They need that initial funding to get to that point. So that that's fantastic for the ecosystem that angels can support in those early stages, and then we can sort of co-invest. I think a lot of the angels that we've worked with have been, really experienced in their own sectors. And if that's sort of really useful to the companies, we've seen, angels sort of taking on advisory positions, board positions, or just a little bit of ad hoc advice, which can be really, really beneficial to the companies. And then I guess often, you sort of allude that the angels might not be in for the journey quite as, in terms of reinvestment as much as we are. But what's interesting is we've seen, I guess, a growing market for secondaries. So in some of the even A's, but certainly B rounds that we've been involved in, there's for the really exciting companies where there's a lot of appetite, actually incoming investors can consider secondaries and give some of those early angels an early exit, which is, from our point of view, we're hoping that the company's got a huge amount of growing still to do, but actually already at those points, the multiples can be perfectly adequate for the angels to get back the return that they're looking for, and go off and recycle that into other projects. So I think we definitely see a lot of room for collaboration.
Yeah, I mean, I think that's the actually ideal scenario, isn't it? So the angels get involved pre-seed, and then at Series B are able to, like you say, recycle their money. And so you did touch on where the angels come in at the real pre-seed, pre-revenue, etc. With MedTech companies and with other deep tech, I guess the time for revenue is probably there is a lag to revenue than just, a software SaaS tech company. What would be the key KPIs and the key metrics that you're looking at in those sort of on the earlier stages of your investment cycle?
Yeah, absolutely. Yeah, so those revenues, especially in sort of therapeutics, can be extraordinarily long, but you need to see the progress and hitting those milestones along the way to know that you're supporting a good project still, and to know to reinvest, etc. So definitely regulatory pathways, hitting the different milestones regulatory wise, getting clinical data, sort of good proof points along the way, and then I guess work with key opinion leaders, sort of getting sometimes key opinion leaders to sort of do co-development studies or sort of on the research side, just to kind of proves out that people are really interested, users and engaged, relevant people in the industry are really interested in the technology. They really like the potential of it, and they're willing to sort of back it with their time and resource, as well as help sort of guide what it becomes along the way.
You're fine. So maybe not revenue, but interest from other companies. That's
absolutely. And sometimes it's kind of co-development projects, or even letters of intent. All of that stuff can be really meaningful before the actual hard bucks roll in. Yeah,
absolutely. And I mean, I'm sure this is a question that it would be great to know the answer to this. But have you seen in your businesses that you've seen a common theme of success? So a marker of success?
It's so hard to say because they're all so varied.
I know, it's a tricky question.
Yeah, it is. But I think I would say that the successful businesses they need to be good businesses. Just good technologies alone are not good businesses. To be good businesses, they need the good people and the good teams to be built around them. And so the good teams are only there when there are good management, good culture. So I sort of I don't think that can be stressed enough, really. And actually putting in just good culture, good ways of being a team, good ways of interacting is really important to think about from the early stages, because if you sort of don't think about it, you suddenly grow suddenly you're 30 people and it's sort of too late to try and backfill a little bit of that. So certainly, yeah, good culture, good leadership is definitely a vital ingredient.
Yeah, I mean, I remember at the beginning of my angel investing journey, people said that it's all about the founder, and it took me a few years to really understand that it really is all about the founder, and you know, the kind of culture that they're setting up in their company from the beginning, and how they interact. I find it how they interact with us during the due diligence process, how open they are, how willing they are to answer all of our questions, especially when we start getting a bit underneath the surface. I think that's quite a good indicator of how they're going to move the business forwards.
Absolutely, yeah, which sort of touches on you know, the investee-investor relationship is really vital as well. You know, for all of the you know, sums of money and for all the paperwork, investing is really about human relationships, and it's about that you know, individual to individual connection, you know, individual to team connection, and it's really important to kind of build that trust. And you know, on you know, both ways, it's really important that the founders trust their angels and their VCs. Yeah, ingrain that sort of good communication is totally vital.
Absolutely. And I guess the counter then to the common themes of success is when things go wrong, which obviously in the life cycle of a company, I don't think there's many companies where something hasn't gone wrong. And how do you at IQ Capital deal with that if things have started to turn a bit south for the company?
Again, hard to talk in generalities, but I would say that it's a whole lot easier to deal with something going wrong if there's been good communication beforehand. I think, you know, if there's a company that's been telling us, you know, everything's fine, and suddenly the floor, you know, falls out, then it's really hard to know because that trust is gone. Whereas if there's full openness and honesty from, you know, the management teams, they flag things early, then, you know, we understand, you know, stuff happens, and then we can sort of really work shoulder to shoulder to improve things. You know, sometimes, you know, we can reinvest again, you know, through tough patches. We've done a lot of that. Help to sort of reform teams, reset strategies. You know, all of that is possible, but actually, if the management team hasn't been open when things have started to go wrong, then it just makes that really, really difficult because the trust element is lost.
Yeah, absolutely. And again, if you haven't had an investor update for 6 months, a year, and all of a sudden you get an investment call, I think the willingness to participate in the next round is fairly contingent on how much information you've been given in between.
Yeah, absolutely.
So let's change slightly track and just we will touch on valuations, I think, especially with what's been happening in the markets at the moment. Are you seeing any changes in valuations? Is it too early to have seen anything changed? I know in the fintech space, it has already come over this side of the pond from America, but are we seeing that in MedTech?
Yeah, I think sort of MedTech, you know, publicly listed companies have had sort of a big hit on valuations, and we're starting to see that coming through to private companies, and it's sort of still more so for the later stage companies, but it's sort of coming down the line, and some of that was necessary. We're seeing valuations that are getting maybe a little bit ahead of themselves. So yeah, I think we are seeing more caution in the market, but certainly, you know, no doomsday scenarios. There's a lot of investors out there with a lot of dry powder to deploy. So, you know, there's plenty of investment opportunities for the good companies. So, you know, I wouldn't be too sort of despairing of your portfolio going out to find the next round, because there's a lot of investment out there. But I would definitely, think to caution on valuations. I mean, it's always the case that, you know, you have to make sure that you're setting up a company for success, not sort of overvaluing so that they then are always struggling to grow into that valuation, but really at a point where the only way is up.
Yeah, exactly. I mean, the thing that you don't want is a down round, isn't it?
Absolutely, yeah.
So I think I'm coming to the end of my questions, but we'll quickly ask talk about one of the investments that you've done recently that that you're excited about, and a bit of information on that.
Yeah, absolutely. And I think then we've got a number of questions pinging through on the chat, but yeah, certainly just encourage everyone again, really, really keen to answer your questions in a little bit. So in the medical space, over the last year, invested in a couple of diagnostics platforms, and then also very excited about a company called NanoSyrinx, which is targeted protein delivery company.
So we had a question in from Sabater. I think it's very salient to the conversation that a large number of MedTech companies in the UK has the NHS as a major buyer. Could you talk about some of the challenges that poses, as well as the advantages? And that's to either of you, I think.
Well, I mean, I've invested in one of my latest investments through Angel Academy was DemDX, who it's a clinical reasoning software platform that sell into the NHS. So their platform, it helps frontline medical professionals diagnose and order investigations, etc., before they see a doctor. And yeah, investing in the NHS is companies that sell into the NHS is such a challenge. I mean, one of the reasons why we invested in it was that they already had an into the NHS. They were already there, and they had, I think one of the key things, they had a grant from NHSX to embed AI in their platform, but not just having sold into one area of the NHS, but having extra areas within the NHS. That means you're on the NHS's radar, because it's all very well selling into one department in one hospital, but that definitely does not mean that you're going to then scale out to the NHS as a whole. So I think, having a bit extra from the NHS was important. Have you done anything, Jo, with the NHS?
Yeah, I mean, it's an obvious big customer for a lot of medical technologies, but it's really hard. And I think it's always the case with medical technologies that the value that they should have to the clinician is only such a small part of the story. Actually, integrating them with sort of medical systems and processes, let alone actually getting them through procurement, is just such a huge journey. So we do see a lot of companies that go over to the US first. But having said that, there are a lot of opportunities for sort of clinical stage collaborations with the NHS, with particular clinicians, a lot of grant funded programs. But actually, when it comes to commercialization, we see a lot going sort of to the States or other jurisdictions first.
Well, that's interesting. So Helen's asked a question which really builds on that, which is that are different payment models and indeed different regulatory frameworks in different territories, such as say the EU, are they a barrier to expansion potentially?
I suppose it's sort of seen as quite modular, that depending on the particular medical technology, there might be sort of a slightly better route to go to the US first, or a slightly better route to go to Europe first. It will sort of be a quicker route, but it's kind of quite modular, that you can sort of go to one and then to the other. Obviously, with the UK now being in a separate jurisdiction, we're still trying to work out whether the UK will then become too small a market to be interesting to a lot of novel MedTech companies. Will they just not come here, or other ways in which we can make it really attractive in the UK to be a first sort of trial jurisdiction? If we're sort of a test bed, we're really open to innovation. Hopefully, there could be some opportunities there as well. But it certainly adds a bit of complexity that it's a third major jurisdiction. and it's often the sort of the triangle of those that we're seeing technologies starting in before looking elsewhere. But once they sort of have a good baseline of approval in those jurisdictions, actually translating into others is not such a big leap.
All right, interesting. So stepping back slightly, you both touched on the importance of the founding team, and as a question again from Helen, she asked, that's well and good, but how do you actually make judgments about the founder and the founding team when you're in early stage due diligence? What are some of the things you're looking out for, and frankly, what are some of the red flags?
Yeah, it's really difficult one. I guess kind of akin to hiring. It's sort of, where does good sense of the person's sort of strengths of integrity end, and where does unconscious bias begin, which is definitely something to be mindful about. I think I would I guess focus on their clarity of thought and clarity of explaining, because sometimes if someone is doing something that I'm sure is very, very clever, but they can't explain it to me, they can't explain why it's important and how it works in layman's terms, sometimes you've got to question either how well they really understand the relevance of it, or just how well they're going to be able to really get it out of the lab and to be useful and to be explained, understood by people. And then another really key element is, just to sort of bang on about it again, but the trust element. It's sort of if they're open and they tell us some things and they evidence it and it all sort of fits, that really builds trust. Whereas if they sort of spin a good story and then we see the financials and it doesn't really match, and that kind of thing, then you pick up on little cues that just aren't conducive to trust building.
Yeah, I like it. I speaking to the first half of your answer, then I call it my dad test. I will genuinely call up my father sometimes with a business I don't quite understanding. I'm going to try and explain this to you. Does it make any sense at all? So
maybe
sorry.
Maybe just to add as well, I guess, obviously, another really key element is whether the team have got the skills to go and execute on what they say they're going to do. And I think it's super important that you really believe that they are kind of go-getters that can achieve things, that can make things happen and not just say it. But we certainly don't expect the early stage teams to really have all of the skills and all of the experience to do everything they need to do. It's great when you've got a founder coming around for the second time, but obviously not everyone can be. But I think what is really critical and something we definitely look for is, can they identify the skills that they lack? Can they be open about it? Can they be humble enough to realize that they don't have every skill, and start to sort of put forward a framework for how they'll grow the team around them? Or do they just think that they can do everything themselves, which can sometimes be a bit of a red flag?
Yeah, almost certainly they can't, let's face it. But well, that's good. So building on that, so question for you, Lucy, which is that how do you approach medtech investing if you're not actually a sector expert?
Oh, yes, exactly. Then you use the power of the syndicate that you're investing with. I think that's a tricky one, because you can invest as an angel. I don't just have medtech investments. I'm drawn to medtech, but certainly when you're doing the due diligence, you're using the group power in the syndicate that you're investing in. So in areas where I have got no experience, like IP, for example, we have an IP expert in our network, Helen Jones, who is absolutely invaluable in these.
And is on the line and asking
questions. Helen. So she is absolutely instrumental in, making our IP due diligence happen. And then with MedTech, it's just sort of talking about with a founder. With any investment, it's, the business can be the business, but if you don't believe in the founder, or the founder is throwing up some red flags. I mean, I've invested, one of my last investments was a really early stage biotech company, Cytochroma, a fantastic founder, Dr. Kate Cameron. She's up in Edinburgh at the Roslin Institute. And, she's I mean, almost, on the verge of revenue. But she was just a great founder. She was open, and the last thing that Joe said, admitting what you don't know or where there are gaps in your skill set. I think Kate was fantastic at admitting when she didn't, when something was new to her, or she knew what the hires that she would need to make. She knew the help. She knew exactly what she could do, and didn't pretend that she could do absolutely everything, which for a company that was at such early stages in its business, then that was a key thing for me. So it's not just a MedTech thing. I guess it sort of goes across all of the sectors with that.
Yeah, great. Also, I think Kate is actually on the line listening in. So
oh, is she?
We're
Okay.
not sparing anyone's blushes today. Question about funding and grants, government grants. I mean, how important are they in the MedTech space? I mean, do they, does the imprimatur, as it were, from a large public funder really help? And are there downsides to public funding?
I think as a rule of thumb, I would say getting a government grant is not the sign of a company necessarily being great, but most great companies do have grant funding. I think it's a really valuable resource, great to have non-dilutive funding, especially for expensive clinical trials, expensive development. Definitely great to get, but I would sort of caution where it can be quite dangerous is when there are really specific calls for grants in particular sectors, or for companies that are answering particular questions, and companies sort of duck and weave to squeeze what they're trying to do into the funding call, and end up doing something that's just not on the core path for the business, end up with a distraction, sort of money diverted to do something that's not quite what they need to be doing, and that can be really dangerous. But where you can get grant funding that's fully aligned with the core business plan, then absolutely it's a super valuable resource.
Yeah, it's very interesting. Lucy, any thoughts on that?
Yeah, I mean, obviously for angels, the non-diluted funding is fantastic, and especially at the really early stage. I'll bring up Cytochroma again. Kate Cameron, the founder, she had one of our opposite of red flags, green flags, was her success in grant funding. I mean, she was really successful in going for grants, and about a month after we did our investment, she got a great big grant from Innovate UK to widen her offering. So yeah, it augmented what she was already doing, rather than distracting. And again, with the DemDX, with their grant, it was augmenting their offering. So in terms of, I haven't invested in a company where the grant has been a distraction. I simply don't see the deal flow that you will see, Joe.
No, it's interesting. When I'm discussing with founders whether they should go for Innovate UK funding, for instance, and so I always say, well, officially it's free money, but in reality, not so much, right? So interesting to the pros and cons.
Yeah, I mean, sometimes the application process can be quite lengthy, but at the same time, actually, some of that work can definitely be recycled, because sometimes forcing maybe if some of the companies that have sort of got pitch decks that they send to investors and they've not really done a full business plan, actually getting it down on paper, thinking about some of those questions, and you end up with kind of material that you can reuse for all sorts of other documents. That it's not all time wasted. Yeah. No,
recycle or die, as we used to say back in the day. There's a question from Nicole, who said, you mentioned some of the things you look for in investments, given the longer term nature of med device products. Can you elaborate a bit more on what proof points you would look for as minimum requirements as an angel and seed investor?
Oh, so as an angel, I mean, I think in terms of if then pre-revenue, etc., you do want some, like, either clinical certification to sort of prove their tech is going to actually be valid. IP you're looking for. I mean, I would be looking for grants. I mean, that's something that does help for me with my experience at the moment. But yeah, I mean, I'm quite comfortable investing pre-revenue. I quite like that bit of the journey, because you'll generally see a few pivots before that stage. You'll invest in a company that's going in one direction. By the time they've come to market, it's unlikely that they're still going in exactly that direction. I find it quite rewarding seeing that, but I know it's not for everybody, investing pre-revenue, etc.
Okay, great. So question for you, Joe, which is, you touched on it earlier about your active involvement with some of your invested companies, but was particularly interested in exploring how you might help them shape up for an exit. How involved in that process are you?
It can vary, and I think exits often come in the form of sales, but also IPOs. I mean, we've got within our own sort of fund advisory panel, we've got some real experts in IPO, the IPO markets and process that we bring alongside, as well as experts in more of the sort of M&A. Often we work with advisors, but actually advisors come in every shapes and size. So we know who's been really good recently for sort of maybe similar technology, similar businesses. So that sort of comes in handy. And then just to try and, I don't know, sometimes it's just kind of talking through with our management teams, helping them sort of hold their nerve, helping them to understand the sort of the tricks and games that sometimes go on. And just, helping them to sort of understand their options and the different terms involved. Just, but again, they come in all shapes and sizes.
Okay, great. Tricks and games. Who knew that they existed in this world? But, well, look, both, I've got the boss shouting in my ear saying it's time to wrap. So I think that's been fantastic. Thank you so much for your conversation and questions. At this point, I'm going to bring Sarah back in, and I think she's going to do a little wrap. Not like that, like as in wrap up. Although,
I'll try.
I never know. I never know.
Can you bring the slide up, please, Simon? I just wanted to mention a few next steps. So if there are founders on the line that are currently raising investment, I know it's great to see some from our portfolio companies, but new founders who haven't yet applied to us, please apply via our website. It is really the fastest way onto our radar. Simon's going to put the link into chat now as well, so don't worry about writing it down. If anyone isn't already an angel investor with us and would like to join, please drop Michelle an email. We have a newsletter. Please subscribe to that. We are very active on LinkedIn. Actually, Lucy, who's on the call now, helps us with our LinkedIn. And if you want to watch previous episodes of this series, we've looked at different sectors, we've looked at different areas of due diligence and investment. We have got a YouTube channel with quite a few videos on it now, so please have a look at those. But thank you very much for joining us this evening. Thank you again to Joe and Lucy. That was really insightful, really helpful. Thank you very much. And thank you to Simon for chairing the Q&A. And thank you to all of you for your questions as well.